Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies stock, Palantir Technologies stock, and Tesla's TSLA stock. In this video, we will be analyzing a plethora of articles, to where the first one is titled, How Far Can Sofi Stock Rally? Chart Provides a Clue. So we'll be discussing how high Sofi stock could actually soar in their overall stock price, and if Sofi stock is still a good investment opportunity. Naturally, we will also go over their latest news catalysts regarding how Wedbush recently weighed in on Sofi Technologies' future earnings report, and we'll be analyzing that to determine whether or not it's a positive or a negative catalyst. Next, we'll talk about why Palantir remains this person's top investment. So I'll be going over their latest news updates, price targets, price predictions, as well as what I personally think of the company and how we can practice proper risk management when investing into very speculative single risky stocks such as Palantir Technologies. After that, we'll go over some more good news regarding Palantir Technologies in terms of how the CEO has recently snapped back at Bear Cave, who was trying to short Palantir Technologies and create a lot of fear, uncertainty, and doubt surrounding this overall company. So we'll determine whether or not these comments are true or false, which should dictate what you should do with the stock, at least in the short term. After that, we'll talk about how Palantir launched Foundry for manufacturing on Amazon Web Services. So they have already had a great partnership with Amazon Web Services, so it's really good to see how Palantir has listed their Foundry platform for commercial enterprises in terms of manufacturing over on Amazon Web Services, also known as AWS. This is going to give them a lot more exposure and hopefully lead to more customers. Lastly, we'll round out the video talking about Tesla's TSLA shares regarding how Panasonic is boosting their overall battery output to sell to Tesla. So we'll be going over the latest news catalysts, news updates, and price targets for Tesla's TSLA stock. With that being said, I'd love to hear your thoughts about any of these companies. If you like or dislike any of them, make sure to subscribe to the channel for more videos just like this one. Also, if you want to support me personally, and if you want to know about the companies I personally am adding to my portfolio, don't forget to become a member of this channel for as little as just 99 cents. It's less than $1, so this won't even hurt you at all, and it gives you a huge benefit of knowing what stocks I personally am buying. But with that being said, if you've already hit the like button, I say let's just jump right into today's story, starting off with Sofi Technologies, which operates as a digital bank, and recently their Sofi share price has been exploding in price based off of very bullish positive momentum. So what's driving the stock? Like we've talked about in previous videos, the debt ceiling negotiations and the debt ceiling agreement is increasing the share price of Sofi Technologies, because with this debt ceiling deal, a part of the agreement is that the student loan moratorium will end, which will increase the overall demand for Sofi's refinancing capabilities in regards to federal student loans. So this is going to increase the demand and revenue for Sofi Technologies, leading to an even higher share price and more investor enthusiasm. Also, growth stocks in general have been performing very well lately because investors normally look to ARK Invest's ARK Innovation ETF, ticker symbol ARKK, by ARK Invest, specifically Cathie Wood, and it seems to be performing very well, meaning that the majority of aggressive growth stocks are also performing well with it. A rising tide lifts all boats, and that's exactly what we are seeing happening with Sofi Technologies and other aggressive growth companies. Sofi Technologies currently trades for around $7.60, while bearish analysts believe this company should actually only be worth between $2.50 and $3, while more bullish positive analysts believe this company could surge up to $10 per share. For me personally, I have an $8 price target on this overall company, and once it reaches that price target, I anticipate once the student loan moratorium ends, investors as well as experts and professionals and analysts will increase price targets for this overall company once that catalyst is officially solidified. On top of that, if we just look at their overall chart, we can see that Sofi stock gapped above their 50-day and 200-day moving averages, which is very positive. It then exploded over a downtrend resistance the following day, adding more volatility, but the shares are still pressing higher to this day. However, on the negative end, if this company ever lost momentum, we could see the shares drop down to around $6.50 and hopefully hold a support level there at their 10-day moving average. But if that was ever compromised, it would drop lower to between $5.50 and $5.75. For me personally, I am waiting for a pullback in this overall company. But if that doesn't happen, honestly, I want to see them reach that $8 price target because I think the company should be trading between $8 and $8.52 at least over the next 12 months until certain catalysts are solidified, which is going to positively impact their overall future projections and increase investor excitement and enthusiasm, thus causing a flood of demand not only in their stock, but also their overall products. So overall, I would say Sofi Technologies is doing very, very well on the overall stock market right now, and it's a strong fundamental company. However, I myself only have a 4% allocation to this company. I don't advocate for more than a 5% initial portfolio allocation to any singular risky growth company because anything above that allocation would be improper risk management to where you are taking on unnecessary risk of losses. So always make sure to practice proper risk management. On top of that, Wedbush is one of the institutions that are very bearish and negative about this company, giving them a $2.50 price target, which is way too low, but they do have projections and forecasts for their quarter 3 or Q3 2023 earnings, to where they're supposed to bring in a loss of 4 cents per share, and for the full year, they're supposed to bring in a loss of 15 cents. And likewise, in quarter 1 of 2024, they're supposed to have a loss of 2 cents per share, and for quarter 2 of 2024, a loss of 1 cent before eventually becoming completely neutral at the end of 2024. However, according to current projections, this is fallacious because apparently they are supposed to become profitable by the end of 2023. These forecasts dictate that it won't become profitable by the end of 2023, and that's why they believe the overall share price and price target and price prediction will decrease to $2. And I will agree with them in the sense of if they do not achieve profitability like investors were promised at the end of 2023 or the beginning of 2024, this will negatively impact the overall share price for SoFi stock. But if they end up becoming profitable, this is going to act as a positive catalyst, lifting their overall share price. So make sure you keep that in the back of your head and ensure that you are doing your own research and analysis because these are the risks and I want you to be aware of that. Next, let's talk about Palantir Technologies and their PLTR stock specifically. Palantir is a big data and analytics company which serves both commercial enterprises as well as government agencies and clients, and they are most notably known for their artificial intelligence. Palantir is a high-end company. They have such a strong product and offering and service that they have almost a monopoly over the technology companies in their sector. They have posted very impressive growth overall, and profitability has already been achieved, meaning that this company has lowered the overall risk. They also have a lot of money on their balance sheet, so this company is not at risk of going out of business in the slightest. On top of that, if you weren't familiar, Harvard at one point called this company a secretive unicorn, and some people believe that this is one of the most challenging technology companies to get a job at, making it very prestigious. Also, no other company offers a complete solution like Palantir does. And clearly because of this, they are dominant and they are a market leader in their overall space. Palantir's share price continues to increase, which is why this author, he says Palantir is his #1 holding, and he also says that you should buy or hold this candidate, especially if you plan to hold this company over the next decade. I do think Palantir Technologies is very good, however, I do think they are overvalued. Current consensus estimates and analysts project that their non-GAAP income of 21 cents this year and 26 cents next year in 2024. Therefore, if we consider Palantir's price at around 14, it would be trading at approximately 50 times their forward EPS estimate, and for me, that's too expensive for this company's growth rate of around 22% for a CAGR from now until 2030. So if we use those metrics, I do think it is overvalued, and I do think some of these stock price targets are absolutely crazy, but these are some projections. For instance, the 2023 stock price target is 14, the 2024 stock price target is $20, we can jump up to 2027, $55, and 2029, $87. However, I do think that what hasn't been established here is what this would mean for their overall market cap. This would make this company a multi-$100 billion company. And for the amount of revenues that they are bringing in at this time, there's no way they would be able to substantiate that type of market capitalization. However, this is definitely something that investors should be aware of, considering that they do have double-digit revenue growth from now until 2023. Now, despite this author's outlook, I do like how he does make us aware of some risk. For instance, Palantir has a lot of revenue coming from their government segment, and if the government agencies were ever to create in-house software to replace Palantir, clearly they would cut ties with Palantir Technologies. And lastly, if Palantir ever had a data breach, this could be catastrophic for the overall stock, but overall, I would say that it's a great company, very fundamentally solid, not at risk of going out of business, but the share price is too high for my taste as of right now. I personally would wait for this company to lower in their overall share price before investing. interesting. Now let's talk a little bit about a previous story where we said that Bear Cave commented and tried to lower the PLTR stock price. The author of Bear Cave even shared a tweet quoting the CEO of Palantir Technologies, Alex Karp, as saying, and I quote, "The Bear Cave is a bear cave. They can stay in their bear cave." Essentially, he's using a play on words here because bear in the stock market means somebody who has a negative outlook on a particular company or on the overall stock market. So he's saying clearly these people are just trying to short his overall company and stock so they can try to make a profit. And the way they're going to do this is by trying to get others to sell their overall shares. However, the author of Bear Cave pointed out that he had previously had a response from the CEO of EXP World to where EXP World is now down approximately 20% since then. So he's essentially saying, hey, look, I've been right before and I could be right again. And honestly, I don't think that the allegations are true, but I do think they are eventually going to get what they want for this company. They called Palantir Technologies an AI imposter and just a glorified consulting company. And Bear Cave also shared a story about the horrors of working with Palantir Technologies to where one of their customers said it was the worst and most expensive piece of software they had. But again, that's just an anecdote from one customer. Palantir has over 1,000 customers, and it seems that the majority of them are extremely happy with their market-leading software. So even though I do agree in the short term, this company could lose and downtrend in their overall price, I don't think it has anything to fundamentally do with the company itself. Rather, this guy's just trying to play off investor psychology without citing any fundamentals or something that's fundamentally wrong with the company. Palantir has also had a lot of catalysts recently. Like in our last video, we discussed how they landed an amazing contract with the US Special Ops, and right now their PLTR shares are trading at around $15.30 or $15.48 as of right now. Very positive bullish analysts believe the company should be trading between $14 to $15, while more negative analysts believe this company could drop to $5 per share. On top of that, their next news catalyst was that they have launched their Palantir Foundry for Manufacturing on Amazon Web Services, giving them exposure to even more potential customers, and this is overall a very positive news update. Lastly, let's talk about Tesla and Panasonic. Tesla's TSLA shares are currently trading for around $220, while very bearish experts believe this company could be worth only $180 by the end of the year, or more positive professionals believe this company could surge up to $280. If you know me, I have a Tesla share price target of $250, and I am hard-pressed not to move that price target because I do think this is a phenomenal company. Reuters recently chimed in and commented how Panasonic Holdings plans to expand their production of electric batteries for electric vehicles by around 10% over the next 3 years. They anticipate to have this done by March of 2026, and at their current business strategy meeting last week, they informed people that they plan to do this specifically for Tesla. Panasonic also said last month that it plans to build at least 2 new factories for the production of Tesla's 4680 battery cells in North America by 2030, to where Tesla also recently told Panasonic that they would, quote, buy as much as they can from Panasonic. So this is a very good news update not only for Tesla, but also Panasonic. On top of that, Panasonic is currently running a pilot 4680 production line at one of its factories located over in Japan, and Tesla is already producing the 4680 battery cells themselves in-house. And Elon Musk even commented that this is going to be key in making Tesla cars cheaper in the future. Again, I have another video on how we could anticipate a $25,000 or a $20,000 Tesla vehicle, and I think this is just more proof of concept for that. So with that being said, I'd love to hear your thoughts down below about Sofi Technologies, Palantir Technologies, and Tesla stock. Don't forget to go and annihilate that like button, especially if you made it all the way to the end of this video. Subscribe if you are new. Don't forget to become a member for as little as 99 cents because it helps me out so much, and that's what keeps me here on YouTube. And with that being said, I will see you in the next YT video.